All right. What is up, tycoons? What is up, traders? Super excited for today's video. We're going to cover TLT, all right, as well as go over the stock market and take a look at a few other things such as the Fed funds rate. We're going to look at some inflation data, specifically, most likely the sticky inflation data, as well as cover some of the most recent news and things going on across the market and whether or not we're really seeing the end of the bear market or whether or not this is another massive bear market rally and people are just out here getting fooled again. So make sure to smash the like button, subscribe to the channel. We're going to get into the charts in the TA in the later half of the video. So if you want specifically charts and key levels, go ahead and fast forward to the later half. We're going to go over a really good presentation and some data here first. All right, so let's go ahead and jump into it. And the first thing that I want to go over and really highlight is going to be this Wyckoff here. Okay, so if you're not familiar with the Wyckoffs, it's a really good thing to start learning and studying about. And this is the SPX weekly chart, and this is a bold prediction. I'm not saying that this has to happen, but this is a scenario that we have to keep in mind. Look at how very similar the current stock market looks like to the Wyckoff schematics, right? We have our spring right over here. We've got the breakdown. We've got distribution, okay? Look at both of them, guys. Then we got the throwback. We got the throwback over here as well. And we had a big crash afterwards. Big crash afterwards. All right. We break some lows of the correction level right here. Break some lows. We're possibly at the top of this correction phase right now. Okay. And if this is true, right, and if the Wyckoffs are really going to play out, this could take the S&P 500 all the way down to, maybe even 3,500 to as low as 3,000, maybe even 2,800. Now, I'm not here to be all doom and gloom, okay? And this scenario, this can get broken at any single time, right? If we come down and let's say we break out of this, right, then it's going to void this Wyckoff pattern over here. But it's just very, very interesting to look at the weekly chart and see how well it really is lining up with the Wyckoff schematics and Wyckoffs over here. So if you're not familiar with those, I definitely recommend trying to learn some of that. It's very useful and very helpful for spotting different phases of accumulation and different phases of distribution in the market. Now, TLT has been a leading indicator for the market. And the reason being, I'll actually show you guys so that you know why, and I'm not just making this up. So what we have here is going to be the stock market up top in red. Okay, and then we have TLT down here in bottom. So if you look, all right, and this is the S&P 500 futures, this is TLT, okay? And you can see when the stock market is rallying up here and creating higher highs, TLT was, dropping and making lower highs. And what happened? The stock market ended up following and crashing shortly afterwards. Same thing over here, stock market perhaps getting ahead of itself, right? Rallying, making higher highs, while TLT is over here dropping, making lower highs. And what do we see? A crash. Now over here, the stock market's dropping. We're making a low and then we're making a lower low. But meanwhile, TLT is starting to rally, right? And what do you know? Right after that, the stock market follows and starts to rally. Over here, stock market making higher highs. Over here, TLT making lower highs. What happens? The stock market follows and we see a big crash afterwards. Over here, look, guys, the S&P 500, the stock market has been rallying, right? It's been no secret. There's been lots of rallies, largely due to some earnings, okay? And also really just Powell's stance and whether or not people are interpreting whether he's dovish or coming off more hawkish. And it seems like he's more dovish after his latest speech. Okay, but TLT making lower highs, okay, not following the S&P 500. And now if TLT is going to keep being a leading indicator, this could mean that we could potentially see another big move to the downside, as we have multiple times when the stock market is rallying, but TLT is not doing the same. Now you combine that with this Wyckoff right here, comparison to the stock market, and we're starting to see multiple things align up together. Now, I'm not here to be a complete bear, okay? I would love if we continue bullishness and, really just get this bear market over with. But we have to keep an open mind and, really respect all of the possibilities. So that way we don't caught off guard and we can make the best trades possible. Now, recently, non-farm payrolls crashed the stocks, bonds, and commodities all on Friday. So this chart right here may seem a little complicated, but I'm actually going to break it down for you. It's very, very simple. So what we're looking at okay, is we have the stock market here in blue, we have TLT here in purple, we have gold, we have bonds, or not bonds, but commodities, DBC, the commodity index. Then we have the US dollar in green, we have the 10-year treasury in red, as well as silver here in silver. So as you can see, TNX, okay, the 10-year treasury yield and the US dollar spiked on Friday, right? If you want to be trading certain assets, whether it's commodities, whether it's stocks or bonds, you need to be paying attention to the US dollar as well as the treasury yields, okay? And we can see that that spike that happened as a result of non-farm payrolls, okay? They expected about 180,000 jobs, something like that, maybe 118,000. And what happened was we got over 500,000. So that led the market and the bond market specifically to really think that, okay, well, hey, Powell may have to, keep these rates up higher than longer. They've really been calling the Fed's bluff, and we've been seeing yields drop, essentially saying that the Fed is bluffing and that, hey, you guys, we're actually pricing in rate cuts by the end of 2023 because we don't think that you're going to keep, raising these rates and keeping them high for as long as you say you are. We think that you're bluffing. But we can see non-farm payroll really threw a wrench in that. Now it may just be a short-term wrench, but if you're bullish, you're going to want to see the US dollar continue to fall, and you're going to want to see the 10-year treasury yield continue to fall as well. If those continue to go up, it could be an indicator that there's more pain in tune for the markets. Okay, we can see here that everything crashed, right? Stocks, bonds, commodities, gold, silver, all took a nosedive on Friday after the non-farm payrolls, where we saw the US dollar and the 10-year treasury yield start to go up. Now, this is the US dollar versus the 10-year treasury yield versus the stock market, just so you guys can get a little bit of a better visualization. So let's take a look here and let's focus on the dollar first in green. So we can see the green line is trending down and the blue line is the stock market. And what has the stock market done? It's trended up. Now, the red line here is going to be TNX. This is the 10-year treasury yield. And what do we see as this continues to go down, right, and is in a downtrend, making lower highs? Okay, we start to see the stock market also go up. Now, again, what happened? Both of these went up on Friday, and then the market fell down on the following Friday as well. Over here, this is the US dollar 10-year treasury yield versus TLT, and it's something very similar, okay? What you're seeing here is you're seeing the TNX go down, you're seeing the US dollar go down, and then you're seeing TLT start to rise. So if you want these other things to be bullish, right? If you want the stock market, if you want SPX, if you want TLT to go up, you're going to be looking and needing to pay close attention to TNX and DXY. So that way you can tell, and really just understand why things aren't really moving the way you want them to, right? If you're expecting TLT to go bullish and you're not even paying attention to the dollar or the 10-year treasury yield, and you're seeing that that thing is spiking, you may be completely caught off guard by a downwards move in TLT. Okay. The next slide here is going to be PMI. Now this is like inflation data right here versus sticky inflation. This is actually core sticky inflation in red, and then the PMI here in orange. And what we can see is that even though, PMI has definitely gone down and really peaked right around November or December of 2022, we can see that core sticky inflation is really up here, remaining elevated. And this is something that we really need to, go down. And the whole thesis behind this is that inflation may really be a lot stickier than some people are pricing in. And if inflation sticks around longer, that could mean that the Fed fund rate has to stay higher for longer as well. All right, if we take a look at the next chart, this is going to be core sticky inflation versus the Fed funds rate. All right, so the Fed funds rate here is going to be in blue, and we have our core sticky inflation in red. And what I want you to take a look at is, once the blue line gets above the red line, that's when you really see core sticky inflation go down. Okay, meaning that the Fed funds rate is higher than the core sticky inflation, and that's ultimately when core sticky inflation starts to go down, right? And it usually takes a little bit of time. We see over here it's elevated and the Fed funds rate is higher, but it takes a little while for sticky inflation to go back down. Okay, over here, the Fed funds rate goes back up above, core sticky inflation starts to drop. As they start dropping rates, core sticky inflation goes back up. And, each time it takes the Fed funds rate getting above the core sticky inflation to really see a drop in that sticky inflation. And there's still a little bit of room to be done and some work to be done here. So, you know, this is another thing that you kind of need to just pay attention to and you know, just be aware of, right? And if you're looking to be a perma bull right now, you know, inflation is proving to be a little bit stickier than people thought, and we really need to see this core sticky inflation start to drop. Okay. And the next thing we have here is just some interesting data. Okay, so the S&P 500 is closed above its 50-day, 100-day, and 200-day moving averages for 6 straight days, which feels significant. And it kind of is, because there's only been one time since 1950 when the S&P 500 fell 20% or more, then rallied to climb above all 3 of its moving averages, without that rally being the start of a new bull market. And that happened in 2002. Okay, so shout out to Callie Cox for making this and, you know, just, you know, presenting some of the data. So we did in the beginning look at some possible bearish data, but there is bullish data out there as well, guys. So, you know, it's really up to you to kind of, you know, stay on top of the info and really stay up to date with what's really going on in the market, and be tracking the current things and the current, you know, numbers that you want to be looking at. Okay. Now we have a lot of earnings releases coming up still, okay? Monday after close. So after close today, we have Pinterest. That's going to be a really, really interesting one. If you look, the past 4 earnings calls, okay, Pinterest has went up after earnings each time. So, you know, I was very tempted to play call options on Pinterest, as I've done in the past, but I don't know if that pattern is going to continue, right? And, you know, you don't want to overextend your luck, because at the end of the day, playing earnings call is luck. The company could report good earnings and then, you know, the stock could drop. The company could report bad earnings and the stock could go up. So I'm personally leaving Pinterest alone. You know, I feel like I had my run with that, but that pattern may repeat itself, right? And we may see Pinterest actually start to rise. It's actually going to be really interesting, Pinterest earning, because they're largely due, you know, with advertising, right? And advertising companies, you know, play a big part in the market. You look at companies like Facebook, okay, you think of companies like Snapchat, Pinterest, you know, Trade Desk, things like that. All right, these are all companies related to advertising, and they give you a good view into the market and really how advertising is doing. Google just recently reported earnings, and their ad revenue is down. So will we see the same in Pinterest, or will Pinterest, they have a really good business model compared to a company like Snapchat, where they're actually able to monetize their advertising and their viewers and their users a little bit more, which is why I think that Pinterest has been going up, because they're looking at companies like Snapchat, social media companies, and saying, well, Snapchat doesn't have a good business model. Pinterest seems to have a better business model. And maybe that's what's been attracting investors after each earnings. But again, you know, we'll have to see how it actually comes out and how it actually performs. There's a few other ones in here. Okay, Chipotle is reporting earnings here soon. Enphase Energy, Royal Caribbean. We have Uber, Disney, Affirm. Disney is going to be a big one. Robinhood's going to be a big one. All right, the food companies are actually really interesting companies to look at, right? Wendy's, Chipotle, McDonald's. I think McDonald's may have already reported earnings, but we have PepsiCo coming up as well. Also, you know, PayPal, Cloudflare, Lyft. All right, so, you know, we still have, you know, we're still in the middle of earnings season and have a lot of earnings coming up. All right, now February 7th, okay, we need to be ready, because Jerome Powell is speaking again at 12:40. So if you weren't familiar, we do have a market catalyst on Tuesday, so don't be caught by surprise on Tuesday. Now over here, what we have is basically how big and how much up the stocks are since January 1st, okay, since the beginning of the new year. Tesla was up 54%, Nvidia up 44%, AMC, guys, up 49%, ARK up 37%, Meta, after its earnings report, just skyrocketed. That thing's up 55%, Netflix up 24%, AMD up 33%, and Apple up 19%. So it's not all bad news, as, you know, this slide presentation started off. You know, a lot of things have been bullish. There are a couple of bullish indicators, but there is a couple of bearish indicators we need to be cautious of as well. So you really need to be well versed in, you know, making sure you're paying attention to all of the data, not just one side of the data. Now, recently the S&P 500 rebalanced. All right. And the reason this is important is because this is changing, you know, the companies and the weighting of the S&P 500. So if you take a look, energy, okay, pre-rebalances in blue, post-rebalances here in orange, energy went from 1.4 to 8%, right? To 8% exposure of the S&P 500. Information technology dropped a lot, okay? It dropped from 44 down to 34. Okay, we can see that real estate dropped a lot. Okay, went from 2.3 to 0.9. Industrials have gone up in weighting. Okay, from 3.8 to 5.1. Healthcare. Okay, healthcare stocks have been. There's been a few healthcare stocks. Okay, stocks like Merck, MRK. You know, if you go look at those charts, man, those things have been extremely bullish. And we see that communication services dropped, as well as consumer discretionaries dropped. Consumer staples, huge increase from 1.9 to 7.1. So we're seeing some of the lowest factors, right? Like consumer staples and energy, we're seeing an increase in those to a much higher weight in the S&P 500. So, you know, you have to keep this in mind whenever you're looking to, you know, trade options on the S&P 500 or invest in the S&P 500 shares. You need to know that, you know, there's a rebalance and, you know, how things have been rebalanced so you can truly understand what you're investing in, right? And now this is something hilarious to me. Michael Burry, the day before Jerome Powell's meeting, he just sent out a one-word tweet, said sell, and then he deleted his account the next day, okay, after everything started rallying. And also, this is pretty cool. This is pretty interesting. I really like ETFs a lot and different ETFs, but there's going to be 2 ETFs now that track the trades of politicians like Nancy Pelosi and Ted Cruz and copies them. That's going to end up going live sometimes this week. So we have NANC, so for Nancy, all right, and that's going to track Democratic politicians and really, you know, the trades that they're getting into and the positions that they're getting into, as well as Cruz. This is going to track the Republicans. So not saying to invest in these, right? I'm not giving you guys this financial advice, but, you know, a lot of people, and there was a lot of hype around following Pelosi's trades and following politicians' trades. And I think that it's really interesting to see that someone was creative enough to come up with some ETFs for these, similar to how they made the inverse Kramer ETF. You know, I enjoy this type of stuff. So let's go ahead and hop into the charts now. This is it for our slide presentation, and we'll get right into it. So if you're new to my videos, what we've been tracking on TLT has been this larger 5-wave structure to the downside in orange, right? So we have a wave 1, 2, 3, 4, 5, taking TLT anywhere from about $80 to $90 per share. Now, this pattern has been very valid and worked throughout the entire year of 2022, but things are starting to shake up and become a little bit less unclear. So I'll explain the method to you. So wave 1, wave 3, and wave 5, those are supposed to be 5-wave impulsive moves. So that's been tracking the whole time. And then wave 2 and wave 4 are supposed to be ABC corrections. So as you can see here, we have a 1, 2, 3, 4, 5. Right, and that completes our wave 5 down and our wave 1 of the original of the larger 1 of 5. Then we get an ABC correction wave up that completes our wave 2 of 5. Then we get another 1, 2, 3, 4, 5 down, and then we get our ABC up. And we started our wave 1 down and our wave 2 up, and things looked great, but we've really started consolidating and just chopping and moving completely sideways here on TLT. And so it's making things a little confusing for everyone, right? Now, if you notice, what we've done is we've respected our 3 major retracement levels of resistance every single time, and we're still respecting those currently. The reason we use these is because nothing moves in a straight line down or in a straight line up. You get a move down retracement continuation lower for trend continuation, or a move up retracement continuation higher for trend continuation to the upside. The 3 main levels you want to pay attention to is the 61.8, the 50%, and the 38.2. All right, these are the 3 most common and most respected. There are other levels, but especially if you're a beginner and you're new to using the fibs, these are going to be the 3 main retracement levels you want to pay attention to. Now, each time we've had a rally or a bounce, we've been rejecting our major retracement levels, right? We did it over here, and over here, we really completed it very, very nicely. If we zoom in, we rejected exactly at our 109.72 retracement level. So let's zoom in now, and we'll break down some of the recent price action and why things have been so confusing. If you've been watching my videos since I started covering TLT, we were able to trade this very nicely and capture this move upwards and really predict that we were going to top out here, but we were waiting for confirmation off of the MACD. We've been using the MACD as confirmation, and it's worked very well multiple times. But what we're doing here is we're ranging, okay? And the MACD is not as effective in periods of consolidation and in periods where the market is stuck in range. So that makes things a little bit more difficult for us. Now, what I mean by using it is right over here, we get a MACD sell signal where this blue line crosses below the orange line, and we rejected our 109.72 level at our 61.8% retracement level. So that was, one sign that maybe we were at the top of this wave C right here, and we were going to begin our 1, 2, 3, 4, 5 down. Okay. And then our second confirmation right here was this MACD sell signal. And we had a strong move to the downside. We retested this trend line here. Now we've been rejecting this trend line multiple times throughout the year. Okay. If you take a look, we started rejecting it up here, rejected again over here, rejected, and then we broke out, we came down, and it would made a lot of sense for this to be the end of our wave one target and also get a bounce off of there, off of that trend line. And sure enough, we do, and we were able to capture this move to the upside. But I've really just been waiting for confirmation on the next move, and we really haven't gotten that. Okay. Now, just as we were using the MACD for an exit signal over here, we got our bounce, okay? And then very shortly afterwards, we got a MACD entry signal. The exact opposite of the blue line crossing below the orange line, we see it cross above now. And that was a nice signal that we're starting our wave two move to the upside. We had a couple gaps up here to fill right here, as well as right here. And we ended up filling all of those gaps very nicely. But take a look at the MACD right now. It's a little bit confusing. We're ranging right now. And what do you see the MACD doing? It's really just consolidating and really just hovering right on that orange line. So we're a little confused right now. What's the MACD going to do? Eventually, it will give some direction. And if it starts to create a lot of room and head to the downside, most likely we're going to see a downside push. We have 2 daily gaps to fill on our charts to the downside, as well as 2 daily gaps up to fill on our chart. So, things really can go either way right here. Now, one thing that I want to highlight is we do have some bearish divergence along with a possible bearish chart pattern. So we'll go ahead and highlight that real quick. And what we're going to be looking at is a double top / possible M pattern, right? So here's our M, all right? And it would look like this and really give us that 5-wave structure to the downside that we're looking for. Okay. If you look here, we have a top and we have a double top over here, right around our 109.72 level. Now at the same point, we also created a bearish divergence on the RSI. So the RSI is giving us a little bit more of an indicator than the MACD, but we're really waiting on the MACD for some confirmation as well. As you see, we have bearish divergence here on our RSI, as well as a smaller bearish channel right here. So it's going to be really interesting to see, do we break out of here and break our bearish divergence trend line, as well as break this shorter bearish divergence channel or bearish channel that we have right here? Okay, and let's just draw some lines real quick. Okay, let's take a look and let's see how we're in an uptrend right here, right? Clearly, we're definitely in an uptrend on the price of TLT. It's very choppy, but we are making higher highs and higher lows. But on our RSI at those same exact points, we have a bearish channel, right? We're making a high, lower high, low, lower low. So it's going to be interesting to see, does this longer bearish divergence trend line push us down? Does this shorter bearish divergence channel push us down? Or do we break out and get a bull flag breakout? Because we're still in bull flag consolidation at the moment, as highlighted by this drawing on the chart. So, I hate to keep saying it, guys, but, it's really just a time to be patient right now. There's no reason to force trades, okay? There's always other trades available and other opportunities to trade. If you haven't been paying attention, there's been many squeezes in the stock market as of recently. And there's lots of potential for you to, discover those squeezes and play those squeezes, right? You don't have to capture the whole 40% move up or the whole 20, 50, 100% move up. If you can get a nice 5-10% trade or something like that and really just be a part of the momentum and capture some of those moves, then then you're doing good. Okay, you don't have to force these trades. If you've been forcing long positions on TLT and not taking profit on the pops, or you've been forcing short positions on TLT and not taking profit on the dips, it's been a very frustrating time for you, right? Because direction hasn't been clear, and we just need to have some patience. Okay, so we did break our original structure, but we have a possible M pattern that could play out, all right, to complete our 5-wave structure to the downside. Or we could get this bull flag right here that could take us out and really, send us anywhere from like 111 all the way up to 115 on TLT. So, wait for the signals, okay? Wait for true confirmation of direction. And don't forget that we have Powell speaking on Tuesday, on February 7th. So be ready for that catalyst. I'm sure it's going to be another big catalyst. Who knows? It may be a nothing burger, but it's definitely something you want to be aware of in case you're surprised, or so you're not surprised by any big moves in the market. That's it for today's video. Hopefully you enjoyed it. If you did, smash the like button and subscribe to the channel. I'm out.